So if you don't know what the difference is between a term and a whole life policy, then here it is in just a couple seconds. So let's start with term life. So a term life insurance policy is a simple and the more affordable option of the two, typically covering you for a specific period of time, usually 10, 20, or 30 years. And if you were to pass away during this time period, then your family would receive a payout that can pay off unpaid mortgages, educational expenses, or pretty much any of the debts that you might leave behind. But there's a catch. Once that term expires, then so does your coverage. Now, a whole life policy is different from the term because a whole life policy is a permanent policy that doesn't expire and lasts your whole life so long as you make sufficient premium payments. And not only does it come with this permanent death benefit, but it also comes with a built-in savings account called a cash value. And so every month, a portion of the monthly premium that you pay into your insurance policy goes into this cash value, and you're able to borrow against it in the form of a loan. Now, I'm not saying that any one of them is better than the other because different people have different needs at different times. So for example, if you're a young parent and you have small children and you just want to get something affordable until they get out of the house, then a term policy typically works pretty well for that. And then on the other hand, if you're an older client, say maybe in your early 60s and you're approaching retirement, then a whole life policy would probably be more ideal because they're set to have a fixed payment and they're designed to last all the way up until the end of your life. And so it's typically best to speak to an agent or a broker that listens to your specific needs and gets you the best one of the two or maybe the combination of both.